How are you doing on this wild ride that the silver markets had these last several months, and particularly since the end of last year? Well, are you still able to be on top of that bull, or has it thrown you already? These are the types of things we want to talk about today, because anytime you have the volatility, and especially a rising market with such volatility, a lot of people get nervous. Today is Wednesday, January the 7th. We're just a few minutes before the closing of the silver market. Right now, silver's at about $78.19, exactly $3 below where it opened this morning. And so I want to talk about that, where we've been today, and also just some ideas as far as how to approach this particular kind of a market. Well, if you've been watching lately, then you know that we've been looking at a channel that was formed on December the 29th. We had an outside day that day. An outside day is just a higher high and a lower low. They're somewhat unusual. One this wide is rare. And because of that, we have something of some parameters, a high and a low, that we can look at. And if it remains inside that channel for a while, the longer it remains in that, the more solid those barriers become. And so keep your eye on it. If it goes through this 83.96 with authority, in other words, by a dollar or two, and remains above that, well, the bull is continuing. But if it drops below this $70.46 with authority by a dollar or two, and it remains that way for a day or two, well, we may be starting to experience something of a correction. Could even be a bear market. Nobody really. Our demand picture is still looking good. The commercials certainly have a great desire to attain silver right now. They're taking delivery on the COMEX market. And now we're even starting to see on the smaller part of the market, the retail sector, where that's starting to pick up. And so these are some of the things that I think are going to give us a little bit of a foundation to where maybe we won't go too far below that if we do test the bottom of this range again. But again, nobody really knows. So let's go ahead and talk about this for a moment. Today, the market opened up at $81.19, obviously the same as the close from yesterday, and it started to go up in the overnight hours, and it came pretty close to this resistance line up here of 83.96. It got up to $82.80, so we were just a little over a dollar below that line, and then it started to sell off. It went all the way down to a low of 76.31, and then it started to come back, and it's closing somewhere closer to the middle of the range. So we have had a pretty good drop today, but it's dropped and then it's come back as well. So we're still in pretty good shape. We're still right in the middle of this range. And so there's not a lot of danger one direction or another, at least not for the next few hours in a wild market like this. And so one of the things I wanted to just get you to be thinking about, if you haven't already, many of you are very experienced in the silver market, and so you already know what you're doing here. Some people are new, though, and so for those of you who might be newer, or even for those of you who've been doing this for a long time, but you really have just not had a big plan on it, think about what you're in the silver market for. Some people are in it for insurance. In other words, they're looking at it to protect their wealth in some way, or to protect their life in some way. And by that I mean they're just buying it with the idea that they may need it sometime in the future. One of the things that attracted me to the silver market many years ago was the fact that it has a way of being a tremendous store of value. It'll buy tomorrow what it bought today in most instances. There are fluctuations off of that, but in the last several months, we've seen that start to really become more of just from a store of value to something that has had a tremendous profit well above just keeping pace with inflation. But again, from an insurance standpoint, some people this is their way to make an insurance premium on their wealth. They look at it that way as well. They're not concerned so much with the fluctuations, the ups and downs, because they're going to keep that silver until they need it, whether there's a big worldwide crisis that causes some chaos in the financial markets, or whether they've got something that's much more personal to them. They lose a job, or they or a loved one goes through some serious health problems. Whatever it is, they've got this silver on hand in case they need it to be able to get them through these difficult times. And again, for those who are looking at it as an insurance policy, they're really not as concerned over the daily fluctuations as other people. They're not holding it for a short-term profit, and so they're not worried about a short-term loss either. And so for these people, it's really, I've spent the money, it's like an insurance premium, it's gone. If I need it someday, it'll still be there because it's something that's solid and I have in my possession. Now, the next type of people are very closely associated with that, and that's those who use it for a savings account. And in this instance, I'm talking about a long-term savings account with a specific idea in mind. Maybe they're thinking about purchasing a house in 5 or 10 years. Maybe they're looking towards retirement in 20 or 30 years. Whatever it is, they're saving in something that they have seen or that they trust will be a store of value. And so, since this is a long-term savings, again, these everyday fluctuations that occur really aren't as concerning to them as maybe the long-term trend is, because if the long-term trend turns against them, then their savings start to dwindle a little bit. But again, if the savings are intended for something far out into the future, well, they're not quite as worried about that either. And so I've used silver as both, by the way, both as an insurance policy against certain crises that can occur, and I've also used it as a savings account, and it has turned out to be a really nice savings account for my wife and I. This is something that helped us to retire a little bit early, and it allows us to make ends meet from what Social Security pays. I was with a small church who did not provide any type of a retirement plan. Well, this was something that made sense to us, and again, it has helped us to be able to do some of the things that we wanted to do. So if that's your motivation, then silver is a good instrument for that, or has been historically, and so that may be what you're looking at it for. There's a third type of person that's looking at it as an investment. And let's just separate that into two categories. There's the long-term investor who just has noticed that silver over time goes up and to the right. In other words, it steadily goes up. And again, that's part of its nature because it is a store of value. And so for these people, they're just looking to have something that is solid, that will give them a profit over the years that they don't necessarily have to realize right now. They just want to make sure that their investment is something that is profitable over time. And again, their time range is a little different than the speculator or the short-term investor who is just looking at these day-to-day fluctuations and just rides the bull up with glee and comes down with something tantamount to terror. And so for those who are speculating, if you've got some experience and you've got a reasonable plan and you've got an ironclad stomach and you're using money that you don't have to have for the mortgage, well, if that's what you want to do, go right ahead. But again, there's a difference between speculating in it and investing in it, as there's a difference between the mindset of somebody that is saving in it and somebody that's just using it as an insurance policy. Now, I will tell you from a personal standpoint, I've looked at it from all four aspects. I've found that I learned the silver market through speculating, but that was back when silver was somewhere around $4 or $5 an ounce. And so it was easy just to get a 5,000 ounce futures contract. Your margin requirement was only something along the lines of 650 or 850 for that contract. That wasn't that much. Even if it went down to zero, you were only looking at something along the lines of $20,000 or $25,000, which for us was a lot of money, but the idea of silver going to zero wasn't much. So I did that for a number of years, and I learned the silver market in part through that, but I also learned that there's a lot more enjoyable things and a lot more prudent things that we can be doing with silver than just speculating or having it for a long-term investment, because even that has its uncertainties. And so probably about the year 2000, a little after that, I started investing in physicals, and I found out that that was something I liked better because it was a much slower pace. You could kind of look at things. I got on eBay a lot and bought 90% silver. And a lot of that 90% silver actually turned out to have collector's value or numismatic value. And when I talk about that, I'm not talking about these modern proof sets that they sell on these online shopping networks. I'm talking about things that you can look up in the blue book and in the red book and see that they've actually got some value. You can look at the gray sheet and you can see what the dealers are paying for these particular coins in this particular condition. And usually the older, the more rare, the more sought after a coin is, the greater value it has at the time you buy it, but also the greater potential for increase. And so I started looking at that end of the market, and I really enjoyed that because I've always had that collector mentality within me, and that's fun. I've enjoyed that. That's something that a lot of you do as well, and so you'll understand. But again, that was part of this collecting, that was part of this saving, that was part of this getting physicals. And so again, over the years, I started just really saving in silver, looking more at things that were just 999 fine silver, something that would just be there that I could sell quickly if I needed it, and it would be something that would hold its value. And so, again, each one of you will have a different background. Each one of you will have a different motivation on all this, but as you could see from my own life, it's very often an evolution. You finally get to the point where you realize what works best for you, and you can do all three things at the same time. You're smart people. God's given you a fine mind, so if you want to use part of it for insurance, and that's a separate account. If you want to use part of it for savings, and that's separate, and if you want to use part of it for investment, and that's separate, that's great. One of the things that I have done in recent years is just take a little bit of the profits out and put it in a trading account. Not a big trading account, but by doing so, when you get to ranges like this, or the potential for ranges like this has only been intact for really about a week long now, but it's been such a wide range that there's actually been some opportunities to buy some little mining stocks close to the bottom of this range and sell closer to the top of this range. And so that's something you can do when you get into a range like this. A couple of things that I do want to point out. Since the market closed yesterday at an all-time closing high, we are at a point in the market where we're getting more dangerous, aren't we? If you're climbing the outside of a building, well, between the first and second story, you're not too concerned, but you get between the 91st and the 92nd story, and a fall could do you a lot of damage if it didn't kill you. And so that's the same with anything in the investment world. Once a market gets pretty toppy, and I don't necessarily mean that you're looking at the top, I just mean that it's getting higher, then there's more potential for it to come down by definition, and that can be kind of scary. So I wouldn't be just jumping into this market if I had never done this before with all my funds. I would probably dollar cost average into it, and I'd probably start really slow, and I would educate myself. I would look around at the different dealers. I would look at eBay and see what things are selling for. I wouldn't buy anything off of eBay unless you've got an experience with rare coins or with 90%, if you know what you're looking at, so you don't get something that's counterfeit. And so, but again, at the top of a market, you've got a lot of people that are just brand new coming in. There's that FOMO, that fear of missing out crowd. They see this is a hot market, and they want to get in on it. They're like the people, I guess, at Las Vegas who see somebody throwing the dice, and the dice seem to be hot. Well, they want to get in on that as well. That's a pretty easy way to lose your money if that's what you're doing. So my caution is be careful if you're just getting in at this market and you haven't had a certain amount that you already purchased way below this, because essentially if you're putting everything in at the top of a market, it does have potential to go up, but at the same time, it has potential to go way down, and you're playing without a safety net on this. You could take a long fall before it stops falling. And so I would really encourage you on that, if you're just getting started, to just kind of dip your toe in the water, go slow, dollar cost average, learn the market, and that's going to help you out. And again, I like ranges like this. They give a little bit of a comfort zone as far as seeing where it's been, and especially once it starts establishing itself for a while. This has just been in place since the 29th of December. It may not be in place tomorrow morning. Who knows what the market will do? But as long as it's in this range, there is a certain comfort zone as far as trying to enter in at different points of it. And there's some other strategies which we've discussed that you can do. A couple of other things. I've seen some articles recently. Bloomberg had an article out recently that was talking about the market having a screaming blow-off top. And that may be true, but it doesn't look like a blow-off top. A blow-off top usually goes up and then right back down, and a blow-off top is a frenzy. I have not seen any type of a retail frenzy on this particular one. There are starting to be some lines outside of coin dealers, and so it's something to keep your eye on, but it's nothing like the frenzy of the 1980s when the lines wrapped around the block and when it was on the national news on a daily basis, and everybody and their grandmother was getting into silver or selling their grandmother's tea set, one or the other. And so this, if it's a blow-off top, it's just a lucky call, in my opinion, by the people over at Bloomberg. And the other thing is, very often these financial networks have a very strong interest in the stock market. I'm not saying they're dishonest, I'm just saying that this is their area of comfort. And there seems to be a love-hate relationship between those who are in the stock market and those who are in the physical market, such as silver and gold and platinum. And there's been a lot of people through the years that have just kind of made fun of it. Dave Ramsey, who I really like as a budgeter, he's a world-class budgeter. He's a budgeter extraordinaire. But he started telling people that gold was essentially a pet rock when it was around $400 an ounce or something like that, and warning them away from it. He's not the best person to be listening to on that, because his experience and his success has been in stock market indices and real estate and selling books for something that he's very knowledgeable at, budgeting and getting out of debt. But you're going to see people that have different biases on both sides, and so be careful with those biases, because it may be something that influences you one way or another. There is certainly a crowd effect where people, they see the crowd going in one direction and they just know that the crowd is right. Understand, in the investment world, the crowd is usually wrong. Now, there are times where the market is going up because there are so many people who need to get something. Silver on the commercial side is one of those cases. They need it for electronics. They need it for electric cars. They need it for solar panels. A lot of sovereignties have started coming in and buying it up as a strategic metal very often for their military purposes, and so which silver is a large component of. And so we have a lot of people who are getting into it up here that have been the ones that have been pushing it up slowly for a while, but now it's starting to pick up because they genuinely need it. I would watch those people more, the commercials, the industrial sector, than I would the retail sector. The retail sector is often filled with hype. It's often filled with people talking their own book. It's often filled with people who are selling the product in the first place. Now, there's nothing wrong with that type of a perspective, as long as you're honest with it, as long as people know that you're selling this product. Most people who are in this that are selling the product are doing so because they're great believers in the product, and it may very well be they've been involved with it for decades. And so I'm not suggesting for a moment that they all have bad motives, but some do get a little bit excited and a little bit too carried away. We are at, I want to say again, or we were last night, at an all-time record closing high, at least on the U.S. markets. And anytime you get to this point, there's going to be a lot of conversation, a lot of excitement, a lot of noise. Know what you're in it for and just continue to have some kind of a plan and then to work that plan. Again, I want to say the best time to formulate your plan is when the market is closed, when you have some quiet hours between 4 o'clock Central Time on Friday and 5 o'clock Central Time on Sunday evening is a great time to be making your plans and just to review where you're at, because there's not a lot going on, the market's not open, and you can be less influenced by what the last tick on the market was. So anyway, those are just some thoughts. There's some very encouraging news in the silver market, but there's also some danger points right now. Just kind of keep your eye on whatever tool it is that you like to use that helps you to monitor the market. Something simple like this has helped me through the years. I've been doing this now for about 45 years, and so I've really kind of gravitated to some very simple tools, and I only use them occasionally. My main motivation right now as a retired person is just to live with what I have and to use it to be able to fund the things that we want to do. Some of the things my wife and I want to do in retirement are to eat and to keep the lights on. And so it becomes a pretty serious matter for us. And so we don't get too carried away with the speculations or the day-to-day activity. However, when the market goes up so rapidly, there is a lot of excitement associated with it. We went up $50 an ounce last year. That was the greatest nominal move in the history of the silver market. There's been some bigger percentage moves, notably in 1979, but this was the biggest nominal move, and it still seems to have some support to it. So my encouragement to you is, this is a bull market. Make sure you don't get thrown off. If you're ready to dismount, then do so, but do so gracefully, and do so before you get thrown to the ground and the bull stomps you to death. But again, if you've been in this for a while, you're probably at a much lower cost on entrance than this $81.19 that the market closed at a high. And so you've got a lot of leeway. Just take a deep breath. Remember what you're doing this for, whether it's for insurance or for savings or for investment. And for those of you who are speculating, you just do what you want to anyway, because speculators typically do. Well, I appreciate your watching today. I hope this gives you something to help you make some more rational decisions for your own personal situation. I certainly appreciate your watching. Let me know what you think about this. I really have appreciated those of you who have taken time to comment. There's some pretty intelligent silver investors within those who have been watching this, who have been gracious enough to make some comments and observations. And so to those of you who have done that, I really appreciate it. Please continue to do that. I promise you I try to read every one of them, and I try to get back as quickly as I can on those. But thank you again for watching. For those of you who have subscribed, I truly appreciate that. This is a new channel, and so you're helping it get off the ground. So I appreciate that. But again, thanks for watching today. I hope we'll see you again next time. God bless.